Hey, good morning, everybody. This is Vance out of the United States in Seattle, along with Victor in Australia. Welcome to our live Forex trading show. Victor, how are you enjoying your stay in Japan?
Yeah, Vance, it's been good. I apologize to everyone for my voice. I promise it's actually getting better. I was on the members session last night, and I'm sure no one understood anything what I was saying. But this is just the remnants of quite a long weekend that I've just had in Japan. And as you can see, I'm still here, and I'm enjoying it very much. Thanks, mate.
Okay, well, hey, it's always great to have you here with us. Am I having some funny colors here? Am I?
Yeah,
God,
it's a little bit funky today. It's got something going on there.
man. All right, I'm gonna have to do something different. I think the camera. See, the camera is trying to anticipate the right color. If I get my hand closer, it brings the color back. Ah, what is a guy gonna do? All right, so let's get right to the analysis this morning. Then we'll touch on the subject of the currency revolution. I've been kind of hinting about for a while here. And after that, Victor will share a trade that one of our team members took yesterday, and we'll take a viewer question. So let me just shift over to my screen. I want to get right to some analysis. By the way, for those of you who might be interested in our training program, just kind of keep your ear to the wall because in about a week or so, we're going to open that up to a few people. So keep that in mind. All right, so the euro is, with a little experience, you'd be kind of mindful that the euro is moving in about a 50 pip range this morning, or this week, last 2 weeks. And what you want to look at is look at how far it moves when it moves. Oh, 58 pips. When it came up this way, 40 pips. And so should we expect any more than a 40 pip move down? Maybe not. So what happens is the euro's just slowed down. Summer, central bank policy, all that combined, just very, very, you'd have to be betting hard that this is going to go through this barrier. So some people did get caught as price hit this bottom here, and they entered a sell on a pullback here. But it's really just in a 50 pip range, and it hit the bottom already. So if you're going to trade something like this when it is in a 50 pip range, make sure that you have room to get in and out before it hits the bottom of the range. I think you can all see that. So, if you took the trade and you lost, or you're still holding on and hoping it'll go down, just remember, this all just comes down to experience. You just need to just keep practicing. If you're in our training program and on our team, you guys know that. So if you execute it, it fits your trading plan. Great job. And make a note. We'll discuss in your next review how we can make a rule that'll keep you out of this. Pound. Okay, the pound. The pound wasn't very nice to us traders this morning, I don't think. Let's drop down to the 5-minute here. No, it wasn't. Basically, the pound, if we zoom out just a little bit, remember, we've got this long-term trend that's developed where these buyers are just looking for the spot to get in. So you get a push down, followed by another push, followed by another push, and then about 4:30 this morning, I guess they felt CPI was good enough information to go ahead and go. Usually that would not be the case, but this big candle, let me zoom in a little bit here. This big candle started at 4:30 a.m. They just took off and they didn't come back. Now, one of the things you have to be able to do as a trader is you have to recognize when behavior is usual and unusual. Now, the reason why that's very important, as you've heard me talk about all along, is that logic is based upon repetitive or usual behavior. What do people usually do? Does she always buy flowers when she goes to the market? We don't know. She does on Thursdays. Okay. Human behavior, that's where it's at. Now, what's unusual here that only happens once in a while, not every day, not every other day, but once in a while, is price shoots off here. And let's drop down. We see the 30-minute. Let's drop down to a 5. Give yourself a little more room. Price takes off and creates a 60, 70 pip, some odd 5-minute candle. Is that usual or unusual, Victor?
It is totally unusual. Pretty to watch though, but very unusual.
Right, absolutely. And so your tendency as a trader to go, "Oh my gosh, the buyers are going crazy. I want to get in." Well, you have to have some sort of logic that's going to allow you to take a high probability trade. And since this is unusual, a 70 pip 5 minute candle, you need to be smart enough to say this is not repetitive behavior. This is highly unusual behavior, and I'm going to step back. And you could go ahead and look for a setup, a pullback over here on the right, but you still be. And guys, if you're practicing in our program, if it fits your trading plan, do it. But no matter what happens from here on out, you're always going to be trading unusual behavior until this resets. All right, so let's pop real quick at the Australian dollar. Look at this coming into a range, increase of risk right here. This, it looks like it did make a second push. I don't know if it pulled back first, but again, it's coming into a really obvious barrier here. Let's see what that range is. That range is about 41 pips. So it's 41 pips to the bottom here. It's already hit it. It's already actually pushed again. Let's just zoom in real quickly. I don't want to spend too much time on this pair. But let's see if it pulled back 38.2. No, not really. It came close. But again, this is the Australian dollar, and that along with the Kiwi, they move a little bit differently. So you really need to make sure that you know the individual nuances of those pairs if you're going to trade them. Kiwi it looks like a little bit of a descending range. Again, if you're gonna trade high probability, unless you've mastered the nuances of pairs outside of the euro and the pound, you want to be very careful. So let's go back to the pound. Again, not a lot to look for here today. If you're practicing, obviously, a pullback into 38.2 or more, you can do that. Euro, it's just in a range. So we need to break below the 135.89 level right in here, or we need, let's say it turns around and there's room to get in and out before it hits this area, because now it might drop into a 40 pip range, guys, right? So be careful in this area. But what we'd really like to see is we'd like to see the euro jump on board and move up here above 136.47. Now, is that likely? It's really undecided at this point because the Eurozone is having a lot of poor expectations for the future. So that's kind of why we're focusing on the pound. They have a good economy. They obviously, the pound is doing better than the dollar. We still have the central bankers, sticking their fingers in the pie. But nonetheless, we can kind of work around that. So that, I wish I had something better to report, but here we are. What is it? July 15th, the middle of summer. And, the euro's in a range. The pound did something very unusual. One of the things that you've got to do as a trader is recognize when it's not a good time to trade. And so with that, let me go ahead and change topics. Let's see, how do I get back to my face? Let's see, the color's okay. I mean, it could be better, right? All right, so I've been talking about currency revolution. I think, for the most part, you'll be hearing it here first. But let's talk a little bit about what I mean by the currency revolution. This is a big subject, so I'm going to be covering a bit on this with each show. I'm going to go into a lot of detail, but over time. But you guys might be really surprised by what's happening right now. All right, to kick this topic off, and it's obviously a big subject. Those of you who've been concerned about a one world currency, I think you can forget all about that. You'll see what I mean in future shows. But here's what's happening. A new currency system is evolving outside of the traditional monetary system. What I mean, literally outside of the dollar. Dollar will still be part of it, but outside of the dollar yen, the central bankers, all of that. And the reason this is happening is because the governments are exercising too much control over the money, and they're making trade inefficient. If you look at business and evolution of business, you'll see that the rule is, or the principle that basically the universe follows, is one of efficiency. So now, mind you, that the central banks, you can like them, you can not like them, but what they've been doing, their intentions were good. They've been trying to stabilize the markets. Maybe the policies that they created before then, you could say, well, they only did it to themselves. Bottom line is, what's been going on is they've been trying to stabilize stabilize everything and keep it from going wonky. But bottom line, it's just too much control. Saying that currencies are in effect equal in buying power is just not true. That goes way beyond efficiency. So we're not going to go the route of Japan. I know you happen to be in Japan, but they did this. They just printed tons of money and kept interest rates at zero for like 15 years, and it just caused a sluggish, going nowhere economy for over a decade. We're not going that route. Instead, the markets are going to evolve into a new currency system. Instead of there being a few currencies, as you're going to see, there are going to be thousands and probably even millions of currencies being traded in a seamless system at the same time. And so we'll talk a little bit more about that on this. I'm giving you a heads up on something huge here before the world's even talking about it. So Victor, let's go over to Victor now. Victor, again, he's someone who, and I apologize for the color of my screen. It's driving me crazy when I look over and see it. I'm sorry, guys. I'm gonna work on that. I know you don't want to look at a green screen. But anyway, Victor's finished my entire training programs, trading live. I actually asked him to join me. He does just a great job working with other traders. And so Victor today, he's going to do a couple things. First, he's going to show you a trade that one of our traders took yesterday, and then he'll pick a viewer question for me to address. So Victor, over to you.
No worries. Thanks, Vance. And yeah, thanks for kicking off that topic. It just feels like you were just talking to me just then, and I've sort of got my notes out, and I think it's going to be very, very exciting. So it'll be interesting to see where you take that and the information that you can give us. I'll just share my screen. Just let me know if you can see it. Just going now. You can see that okay?
Yeah, we got it.
Great. Yeah,
oh, this is Go ahead.
This is a really, really nice trade that one of our level 2 traders took yesterday on the pound US dollar when it broke its range. It's from Andrew, and he was one of our traders who I initially started the program probably about even over a year ago, and he tried to work with it, went away, and he's just come back and he's just worked his way back into level 2, and he really seems to be finding his feet this time around now. So it's really good work here, Andrew, if you're actually listening into this. What he's done is he's found a really nice price advance that's broken this nice level here that he's put on his chart. He's got his entry in there at 38.2. I probably would have had my stop a little bit above that, but Andrew was comfortable having it just on the barrier there, seeing that this move was quite strong, and he had a lovely area for his target. He did all his calculations using the Sun Tzu trade calculator. I think he got a little comment from Vance saying very good, and after the trade had closed, you can see it pulled up there. I think it pulled right back to the 50%. Didn't make it anywhere near his stop, and then that made that lovely second push down. So top work there, Andrew, and I know a couple of our traders took that trade, so well done considering it is summer, and to find a trade like that, that's really great work. Now, Vance, you ready for me? I've got a little question for you. I'm just going to put my screen back.
I want to say, hey, great job, Andrew, and aloha.
Nice work. Hey, now, there's my little questions. Now, this is from Simone, and she's in the UK, and she says that she sometimes sees us use our 30-minute charts for all our charting analysis, and then sometimes she sees us using 5-minute charts when we present stuff in the forums, or if we've got stuff on Facebook or on the Forex Article page. And she just wanted to ask you, which charts do you use, and maybe why do you use the 5-minute chart? Why do you ever use a 1-minute chart, if you're able to tell us that?
Yeah, that's a great question. Thank you for your question, Simone. Really appreciate it. Let's see, maybe I can get my eyes a little higher. Yeah, that is a great question. Let me go to the charts real quick and show you what we do. Someone's asking me yesterday, why not the hour or the 2 hour or the 4 hour? Well, I think the 4 hour gets into a little bit longer term sentiment, which you could probably trade on the pound right now. But as you guys have heard me say in the previous years, there was no point in trading a long term trend. There wasn't one. and but 1 hour versus 30-minute versus 15-minute, you could trade any of those if you tune your eyes into the money flow and the patterns. So in essence, there's a certain amount of money, and let me go back to my face here for a minute. Simone, there's a certain amount of money that is moving over a 2 or 3 day period. Like, for example, if we go back to the charts here, you can see that this day, price, if I was to do this, price moved down about 60 pips. And then this day, price moved up 42 pips, and so on. And we could go back in time and we could kind of see it ebb and flow and that sort of thing. But the bottom line is that there's a certain amount of money that is committed long term, and there's a certain amount of money that is being moved around. Like, okay, today things are looking a little bit risky in the world. Let's move a little bit into gold. Let's do this. Let's do that. That certain amount of money that's being moved around over a 3 or 4 day period is probably about 60 to 70% of the money that moves. And so what that should tell you is that you're going to need to look a little bit shorter term. And that used to be we could just trade daily charts, no big deal. But now most of the money is focused more on what's happening this week and this month. And so we need to be on a time frame that's going to reflect what's happening today, tomorrow, this week, next week. And that we've just chosen the 30-minute charts. Millions of traders use 30-minute charts. It's just the way to go. But you know, if you wanted to, you could do this on the 15. You could do this on the hour. I suggest the 30. And you're going to see if you, particularly if you use the moving averages the way that we do, if you wait for the moving averages to cross and then price to advance, and that's the 21 and 55 EMAs. If you wait for the moving averages to cross, then price to advance, the moving averages are going to be 100% accurate, and you're gonna know that the overall balance of that money that's moving, ebbing and flowing over 3 to 7 days, you're going to know that the balance of that money is in this case to the downside, or in this case to the upside. Or it's like, okay, well, it's kind of in the middle, right? It's just going back and forth. But in the case of this move over here, the balance was to the upside. Better not to trade against the trend because it continues up. Over here when it gets sideways, it's all bets off. Now, the key to high probability trading, as you guys hear me talk about all the time, is being able to use the repetitive human behavior information to make a high probability decision. And so one of the things that we do is, let's say, for example, let's go over to that pound from yesterday and let's look at the 30-minute chart. Now here the pound was making a move down right here. Just I'll zoom in a little bit more. The pound was making a move down. You see that the 21, the faster one's under, so it's in a sell-only mode. And now, right here, it's advancing. Now, this is a 30-minute chart. We can't see on this candle if price went down, moved up 50%, and moved down before the candle closed. We can't see if it moved down, up, down, up, down, up. All we see is one 30-minute candle that ended up closed down here at the bottom. We can't see if price moved down and pulled back and pushed again. We just can't see that. And that's important because, again, we're trading repetitive human behavior. The pattern that we're looking for is a move of strong enough to get in and out with good risk management. That's a minimum of 20 pips, a pullback to 38.2 or better, and then a second push. That's the pattern right there that we're looking for, whether it's up or down, it doesn't matter. And so this is the pattern that you're looking for. That's the pattern. What is that pattern? That's a repetitive human behavior that happens over and over again. And so whether you're like me, someone with no formal education, or you're someone who's got a degree at MIT, or maybe like Giles on our team, he's a computer engineer. You know, you guys might have a whole kinds of math equations that go, well, this is, you know, a over pi equals blah, 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 some complicated algorithm. But all I see is the world's most repeated pattern that looks like this, right? It's the same thing, whether you're at MIT or you're just like me, someone with no formal education. It's push, pull back, second push. It's repetitive human behavior. So you can make this as simple or complicated as you want. So that's the pattern that we're looking for, and we want to know, did this pull back to 38.2 or more here? We can't see. So we got to drop down, zoom in on the 5-minute charts to that area and take a peek. And so let's take a look. So right here, when price makes that move, here's where the wave begins. And you got to learn where this wave begins. Did it pull back to 38.2 or more? Look, it did not. Here, it did not. Here, still didn't do it. All right, so at any point in time here, you're good to take this trade at 38.2 or better and sell. Now, what's the pattern? Here's the pattern right here. Boom. There it is. Push. How many pips is that total? That is 40 pips. Plenty strong enough. Pullback of 38.2 or more. Second push, in and out of the trade. And that's the trade that Andrew and a number of others took. So, 30-minute chart to determine your trend, and that's the overall flow of all the money moving in Forex, and then 5 minutes to actually zoom in on the behavior. Now, you asked about a 1 minute. That's kind of tricky. First of all, I would only use the 1 minute if the market is moving super fast. In other words, moving up 10 pips, down 10 pips, up 15 pips. We're still in the 1 minute candle. I'm talking fast, volatile movement. If you get into trading the 1 minute chart, every time you open your charts, you're going to get into the paralysis of analysis. So primarily look for your moves on the 5 minute chart. If the market's moving super fast, make the exception on the 1 minute chart. Don't get caught up in too much precision on your fib. Otherwise, like I said, you'll get caught in the paralysis of analysis. No information is absolutely true. It's only good information to use to make a decision, but it's not the truth. There is no truth. The only truth is your experience. Victor, anything to add to that?
No, that was great. It's a really good answer, and I appreciate Simone for asking a question like that. You get an answer like that, and hopefully maybe someone's new to the site or seeing this for the first time. I think it's great information there. So, yeah, thanks for that.
Awesome, awesome. Again, if you're interested in my training program, in just, I don't know, about a week, we're going to open to a handful of traders. So let me show you on the website how you can actually get on our mailing list. If you're coming from Google, YouTube, you might be looking for my little book, 8 Things They Don't Tell Forex Traders. You can get that all right here. And also, this puts you on the mailing list. And also, if you're on the mailing list, guys, this isn't spam coming from all over the world. If you click unsubscribe, you're unsubscribed. So, but you'll find out what topics we're going to be covering each day on the show when we have one, when we're expanding the show, that sort of thing. So, and also you'll find out when we open the classes. We only accept a limited number of students, and then we close up for 4 to 6 weeks. So, if you're interested, one thing I wanted to say is some people talk about making time to be able to focus on trading. I wouldn't look at that. I wouldn't look at it that way at all. Okay, if you're thinking waiting for September, kids get back in school, I have more focus time. No. You don't want to spend any more than an hour or 2 a day on currency trading. So if you start now or when we open and just spend an hour a day, you will be so far ahead, because what's going to happen is you're going to come to September and you're going to say, okay, now I got time to focus on it, and you're going to be sitting there for 4 hours, and I'm going to say, no, just sit there an hour. You're just wasting your time sitting there for 4 hours. So better to get in and do a little bit each day and just start, because this is a marathon, not a sprint. So let's see, Victor, anything to add before we wrap?
No, no, that's good. I hope that my voice comes back to me by Thursday. And if you'll have me back here, I'll see you back here on Thursday. And thanks for everyone for watching.
All right. Thank you, Victor. Absolutely, we're going to have Victor back, right, guys? So thank you, everyone, attending to our team. Coming about 30 minutes, we're going to get together for the New York Stock Exchange Open for our live trading session. Thank you, everyone, and cheers.